when we look at what's unfolding in the economy, 2023, the Fed had to fight a lot of fiscal thrust. And while that was happening, you're watching net interest payments for households rise. But if you think about, net interest payments rising for households and the households paying the higher interest rates, that's not the same household as the one who are earning the net interest income. And we actually changed our economic forecast last year. We had been predicting, weakness, seeing this deterioration amongst sort of indicators like delinquency rates and fewer and, cardholders paying minimum balances. But when we broke down how wealthy households were by income bucket, the upper 20% of the income distribution is just awash in cash, liquid assets, and high levels of wealth. And they do a lot of the spending.
Paul wants to get in here, but Paul, I can't tell you how this is almost like British economics, and there's a whole heritage of this in Chicago as well. The idea of aggregating our economics now in America. I mean, Meltzer used to yell at me and say, "Tom, you got to aggregate." How do you aggregate in this economy with half the nation flat on their back?
Exactly right. So, Jonathan, are you of the opinion that, there's a lot of folks out there, both in academia and in practice, that are saying this Fed is already behind. They should be cutting rates now. That if you look at the real-time data, inflation is in fact, I'm not going to say whipped, but certainly under control. How do you think about the Fed, and are they behind?
Well, I think in a way they are. One of the reasons you can have that sentiment also, if you look at a Taylor rule, and John Taylor was no dove, and you think that, their long-term dot or policy, their median is, between 0.5% and 1% real, the funds rate should be 100 basis points or more lower by most of those rules. So you can really make that case. But I think one of the things the Fed's doing is it's almost like they've got a short-run neutral rate, and they're updating that with every payroll report. So they've seen sort of the strong economic data, that sort of has bolstered their case that they can wait, and they can keep rates elevated even relative to the progress they've made on inflation.
All right. So as we sit back here, Jonathan, are you comfortable? Well, let's just start, get the UBS house call on GDP. How do you think GDP is going to be for the rest of the year and then for next year?
Yeah, we think GDP is slowing to roughly 1.5% this year, and then the next 2 years is going to run roughly between 1.5 to 2.
Is that staggy? Powell said there's no stag, there's no inflation. Does Pingle say there is stag, there is inflation?
Well, we think inflation is going to generally cool over the next few years. Staggy, No, we're not really telling a stagflation story. We're telling a story more where the economy really is going to slow. A lot of the fiscal impetus looks like it's coming out, and I think that is going to help price pressures.